Beautiful 6% Aptos setup given in advance. I'm going over it because this was wonderful. I was saying, hey, we are already in a Model 1, which can have a pullback, grabbing extreme liquidity, maybe front running demand, doesn't matter, or going into demand, break structure, and then go higher. Guys, I'm going over it. It happened exactly. Amazing. So let's go back in time and let's trade like a real trade like we always do. All right, let's delete everything. And then we see here that we already formed kind of a Model 1. Already formed a Model 1 right there. Because on the higher time frame, you were obviously having a lot of liquidity above, but I went over that a million times. We are drawing our range from low to high. Why? Because market structure goes down, makes a lower high, and then a lower low. All right? So you're in a downtrend. So you draw your range from low to high, and then you see you have an amazing, amazing range, which is this first deviation right there. This is your first deviation, aka your tap 2. So this is your tap 1, this is your tap 2, and this is gonna be your tap 3. And I'm gonna explain in a minute why this is not one tap and one tap, alright? Because when I zoom out, I can see, hey, this is not even structure. This big candle up is not even structure. So this, because this is just one bullish candle, this was very short. So this is going to be one tap. Yes, guys, it's going to be one tap. There's no structure in here. So this is your tap 3, this is your tap 2, and this is your tap 1, which makes it a Wyckoff Model 1 accumulation model. So you can connect the dots, and then you're actually breaking structure already. Let's see if we are doing that. Because when I go on the lower time frame, you see here, hey, boom, the model is already confirmed. A rotation towards the range high is confirmed. Does this matter? Yes. You grabbed all the liquidity already. You grabbed all this liquidity. You grabbed this liquidity right there. So this makes your return zone way less good. Because what does make it good is that this point is not grabbed. And this point is your extreme liquidity point of the range. This is still open. So this wick didn't grab all the liquidity, which makes this a lot of liquidity. Right here is a lot of liquidity on the upside to grab, for market makers to grab. So when I delete this and when I delete the extreme liquidity, where we're fucking around right there, let's extend our range because we already in a confirmed Model 1. And then you want to enter for a retest because you're already in a confirmed model. I want to enter on a retest to take it higher. So what do? I'm watching for extreme supply or extreme liquidity, like what you always do in a Model 2, alright? So do you have extreme demand right here? And you don't have extreme demand right here, very obvious. So there isn't really any obvious extreme demand point. That's going to be your last bearish candle down before going up, leaving an inefficiency. You don't really have any good looking demand. But on a very low time frame, you can see here you have your last candle down before going up, leaving an inefficiency. So this is going to be your extreme demand zone. But higher, okay, look, this is already very low. So now you're watching for your extreme liquidity, which is also fine. You have to grab or your extreme liquidity or your extreme demand. And right there is your extreme liquidity. Why is that your extreme liquidity? Because you went down here, you went up, and this was your first move down before going up, all right? So what do we have here? We have always, I always say it's nice to deviate your tap 1 when I draw a Wyckoff schematic right here. It's already nice. Also nice when you have your Model 2, it deviates your tap 1 and then goes lower because then you deviate your tap 1, all right? It's the same on an extended model. And this is very important because this is your tap 2 and this is your tap 3, all right? This is your tap 2, this is your tap 3. To deviate your tap 2, all right? That's it. You can see it happen so many times. Not many people are talking about this. Very important. This is your tap 2. You want it to deviate your tap 2. It's always nice. So it's the same. So you don't want to deviate the previous tap for a Model 2, but you want to deviate the tap before that. So on a model like this, it's going to be your tap 1, of course. But on a model like this, it's going to be your tap 2 because it's an extended model. All right, hope that's clear. Right now, you put your alert there and you wait for a mitigation because you want it to go lower, break structure, and go higher. That's what I had in pre-planning as well. It's spoon feeding. All right, let's play it and let's see it going lower. Leaving liquidity behind right there. Let's go on a higher time frame, then it goes quicker. And there you can see we grabbed that liquidity point. But the important thing is what happened in that liquidity point, because when I delete this, you indeed deviated that second tap, which is amazing. All right, you now know why. And what happened there is you had that 1, you had a 2, you had a 3. It was insane because this is gonna make a very nice bottom. This is gonna make a very nice bottom. This is your 1, this is your 2, this is your 3. Connect the dots. This is gonna be a Wyckoff low. Let's see if it looks nice on the Bojan as well. And you can see here a nice 6-hour low, not the most pretty, but a nice 6-hour low. Let's watch on the 4-hour low, very nice. And let's watch on the 3-hour. And look, guys, this is where the magic happens. You have your move down, you have your move down, you have another move down. Connect the dots. This is your Model 1. It goes higher. You have your retest. Boom, goes up. This is exactly what you want to see. So where did I enter? I entered at the breakoff structure. I entered pretty high because the breakoff structure was right there, and I actually front run the breakoff structure. So we had this pullback right here, and I was trading the Bojan low in combination with a Wyckoff. So my first entry was this aggressive move up right there with my stop loss right there, because I was watching the Bojan low in the 3-hour, and you can see the close right there, and you can see the move up. So that's where I entered my the majority of my position, and the rest I entered right there. So on average, my position was right, a bit lower, was right here. That was my average position, and I was watching price to go higher. And if I lose this model, amazing as well, amazing trade. Then you need to be happy. When you lose a model like this, be happy because you executed, you saw it, you pre-planned, you saw my spoon feeding post, and now you can see we're indeed going higher. And right now we're here, we are up an very nice hour of 3.5, and I'm targeting the range high, of course. When I do see a distribution in the make, when I do see a low time frame distribution, I will take profits to de-risk my position. I will also look to maybe trail my stop. I do preferably don't want to put my stop below that, because you literally can go lower to grab this before going higher. But right now, no need to. Going to watch it very carefully. We created some demand right there. And thank you for watching, guys. A very nice video. Hope you learned a lot. See you in the next one. Ciao, ciao.